Hey guys, Doug the Retirement Guy here. Got a new update on SPYT, the Defiance S&P 500 Target Index ETF. We got some updates, changes, performance, buy, sell, or hold onto this. It's a neat little program that they do with their S&P 500. It's a nice income generator. So let's take a look at it today. Notice to all viewers, past performance does not guarantee future results. The information provided in the video is educational and informational purposes only. It should not be considered financial or investment advice. The examples and suggestions discussed are illustrative and may not be suitable for individual situations. Always consult a licensed financial advisor or professional for making financial decisions. So who is SPYT? Well, it's Defiance's S&P 500 Target Income ETF. And Defiance takes this one and works with basically the top 100 companies in the S&P 500, the large cap equities, and they write option premiums, they write option calls on those, and pretty much collecting income from those call sales. The secondary object is to get the fund's exposure to the index's performance. So what they're trying to do is give you income that S&P 500 doesn't give you, but also turns around and tries to give you the growth that the S&P 500 is. And as we all know, you cannot get your cake and eat it too. You have to watch what you're doing is you're going to either get more growth or you're going to get more income. And that's what this does. This will give you more income than it will growth. So this is classified as a high dividend yield. Anything over 12% basically is a high income deal. And we have to make sure that we classify this as a risk tolerant option. Now this thing has collected 20.85% annually over the past 12 months. And it also employs the return of capital rate between 81 to 98%. And that, of course, will potentially erode the net assets value of the fund. But also you have to remember, and this is where it gets a little tricky, they also use this for tax purposes. They use this as an advantage for tax purposing of the dividends or the distributions. So I don't see a lot of erosion of the net assets over a 12-month period of this. The year-to-date total return, though, is approximately 12.76%. Now, why is that? Well, it's 20% basically annual dividend income. And what you have to do is take your income minus your losses or add your gains to it to give you your total year-to-date total return. So when we look at this, I'm going to use some quick, simple math and say what is about 8% loss that it had according to these numbers. So they've lost 8%, take it away from your dividends. Basically, you're gaining a solid, true 12%, which is about 1% per month, which is not bad. This was launched in March of 2024, so you have over a year of performance off of it. So it's got some solid legs underneath it, so we can do some heavy testing with. So let's take a look at the forecast, what the experts are saying. And according to the technical model at stockinvest.us, SPY is expected to rise approximately 3.9% over the next 3 months. That's some solid stuff right there. The projection estimates it should reach between 1855 and 1930 with about a 90% probability range. So what's that telling us? Over the next 3 months, we're going to just see a steady, slow, continuous growth north by about 4%. So if you want to gain 4%, they are saying 90% chance it's going to do that. The minimum term, which is 1 year return, they expect SPYT's 1 year return was around 11.97%, virtually exactly what we said earlier. It's nearing the image of the S&P 500 of 12.10%. So they're doing fairly good job there. And it really comes into it's tied closely to the broader market. So if it's something to think about, if the S&P 500 is going to go up, this is probably going to follow right along with it. If the S&P goes down, this is going to follow it on a downward trend. Plus you gain in the extra of the dividends. So very strong package. SPYT is very strong. Looks like to be a very safe fund, and very nice if you want to be in the S&P 500. So let's take a look at it. I look at this in the bar chart and say, yep, we are on a balanced course. We had the drop off, and you look at this, it's probably the drop off right around April. And then it just came right out of its trenches and came right back up to where it was prior to, and doing a very solid number. So 1 month, this thing's up 0.16, 6 months down 3.73%, year to date down 4.19. And that's primarily taking that April into consideration. We take a look at the numbers in June of 2024, it was $19.60. And we go all the way out to August 30th, and it's $18.30. So very well balanced approach. It is slowly starting to getting its legs back after the two big drops that we've had. And when we take a look at the 52-week low at 1488, we're not even close to that. So very well balanced across the board. Now the dividend side of it is where I get really excited. And you take a look at this dividend chart, and we back this up as far as we possibly can. And you look at in May, it did take a big drop, but it's coming right back up. This thing runs at about that 32 to 35 cent range. And when we look at it, and this pays monthly. Now this is a big thing here. It does pay monthly and does pay on the first of the month, which is great for the retirees. So in May, it was 28 cents, June 30, July 30, about 30 and a half, and then August 31st, it bumped to 32 cents. This gives a dividend average right now about 31 cents payment. I expect that average to rise and to continue to rise to get back up to that basically 33 cent mark, just by what the chart is telling us accordingly. And this will give you a 20.82% yield off of your dividends. So the return on investment, now remember, this is the one that we always look at and say, how long will it take to get our money back if we invest into this fund? And as paying a 32-cent dividend lately, that puts the average at 31 cents, and your price tag right now is $18.30. So you divide those two out, and you'll find out it's 59.03 weeks. So just a hair over 1 year. And if you've watched the channel many times before, you'll know 1 year, I'm happy, I'm excited, I'm a buyer in 1 year. Anything below 1 year, I'm definitely looking at it, and I'd be a buyer into this program. And why is that so important? Because if you're a return on investment investor, what you're basically saying is, I want to put $18.30 into this fund. I am willing to wait 1 year. I don't care if the fund goes up to $19 or $20 or the fund goes down to $2. What I'm watching is your dividend. If your dividend average goes down, I'm worried. If the dividend average goes up, I'm very happy. Because after the 59 weeks, and I got my $18.30 back, I am now just taking in all of the average, or taking in that dividend each and every month, and just stacking the money, stacking the cash. This is why I call this a cash cow, that you're just going to take this money, put it off to the side, and do what you want with it. Reinvest your dividends, reinvest your initial balance, do what you want to do. It becomes a cash cow. That's why this number becomes so important. Now, Defiance explicitly states that SPYT does distribute ROC, return of capital. They have to do that if they're going to do this. And they do have to say it could lead to erosion of the NAV. But right now, this August 1st, they report it as 100%, which is the tax advantage. We've looked into this one deeply, and it's really more of a tax advantage than it is an erosion of the value of the fund. So that's a positive. You get some helpful parts to the tax side of it. And especially when you get your money back in under 1 year, you're kicking the can basically down 1 year before you have to pay your capital gains. So let's take a look at the assets under management. As of August 30th, they had $111 million under management. So that's some good, solid money to work with. And they're sitting with about 6 million shares. And what does that tell you? It means you can get in and out of this fund fairly quickly, very safely. Probably within a matter of minutes, you can be in and out. But definitely the assets under management, they have plenty of money to work with to buy the calls that they need to do, and so on. So very pleased with that one. So for us, we put SPYT in our eyes is definitely a buy. It's a solid buy across the board if you like the Defiance package and if you want to be in the S&P 500. As I said, the assets under management, 111, is definitely strong enough to buy plenty of funds. Even if they have to sell a few off, they still have plenty of funds to work with. Their return on investment is 1 year, and we covered that very well. I like everything under 1 year. We take a look at the share prices. In the past 30 days, it's up 0.16%. Over 180 days, down 3.73. We've seen a heck of a lot worse, and then it's following, as we said before, is following the S&P 500 fairly strongly. So no worries on that one. Income, 31 cents. Love it. I wish it was weekly, but just to sneak in that. But getting a 20% total return, you can't beat that one in any way, shape, or form. So to me, I call this a long-term ETF. And what does that mean? A long-term ETF is, if you're going to buy this, set it, let it simmer, let it sit in the back porch, and just collect your dividends and let it go. You're going to see some natural growth. You'll see some nice dividend income from it. So if you're in the retirement side, this is definitely one that you want to look at and say, hey, can I add 20% to my portfolio? Definitely. And that's what you want to do. So guys, it's Doug the Retirement Guy. If you like what we're doing, give us that thumbs up. If you're not a member, hit that subscribe. We got over 21,000 people subscribe to our site and get updates on a regular basis. And I see a lot of comments out there stating, man, I'm making money from all your suggestions and all your different videos. Thank you. And we thank you for being a subscriber. Comments, you like what you see, don't like what you see, put them down below. We'd love to hear what you guys have to think. And if you can support the channel, click the button down in the description. It'll say Patreon. Click on that, Doug the Retirement Guy, and it helps the channel grow and helps us to keep putting videos out. Guys, we'll catch you next time.